Hello and welcome to this Forex Preview at xm.com. I'm Maria Bashardis, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming minutes of the latest FOMC meeting and the potential reaction in the dollar. So Marios, back in March, a majority of Fed policymakers indicated that interest rates will not be raised until 2024, but markets have priced in the first rate hike by the end of 2022. Why are we seeing this dichotomy between what the Fed is saying and what markets believe is going to happen?
Hello, Maria. Well, essentially, the market is saying that the Fed is bluffing, and the market doesn't really believe what the Fed is saying. Now, what is the Fed saying? The Fed is saying that we've done a lot of stimulus, we are doing very rapid vaccinations, the outlook for the economy is looking better, we'll probably get some inflation over the summer, but we think that inflation episode is going to be transitory, it's going to be short-lived because longer-term forces will ultimately pull inflation back down. Now, these longer-term forces are globalization, an aging population, a lack of workers' bargaining power in wage negotiations. All of these are structural long-term forces pushing inflation lower. Now, the market is saying they believe that the inflation episode is going to be stickier than what the Fed expects. So specifically, the market is saying, yes, all of the above are true. We do have structural forces pulling inflation lower, but we've never done so much stimulus. We have never given money directly to people, and globalization has been slowing down for some time now. So if this inflation episode over the coming months turns out to be stickier than what the Fed expects, the Fed is likely to change tune. The Fed currently is saying that interest rates will rise again in 2024. The market is saying the first rate hike will come in late 2022, and then another 2 rate hikes will follow over the course of 2023.
Okay, so taking all this into consideration, how might the dollar react, and what's the longer-term outlook?
Well, I don't think the dollar is going to react to the minutes in any major way. I don't think the minutes are going to move the needle much in this conversation. The Fed has already telegraphed what it believes. The market isn't really buying it. So it comes down to economic data going forward to vindicate the one who's right in this sense. Now, how does the dollar look from here? I would argue that the overall outlook for the dollar is still positive against the euro and against the yen. And the narrative is really simple. The US economy is on a stronger starting point than Europe, for example, right now because of fewer lockdowns. The US is miles ahead in vaccinations. Half of the country has already received an initial vaccination jab, and a lot more stimulus has been unleashed in the US. So blending all of this together, it looks like the US economy is going to outperform Europe and Japan over the next few months at least, and that probably will keep the dollar supported going forward. The counter to this is that a lot of this narrative might already be priced in here, but judging from where the major pairs, euro dollar is trading, for example, I would argue that this narrative still has legs to run.
Marios, thanks so much. And thanks for joining us at xm.com.